If you don't, if you don't have a pad, a writing instrument next to you while you're watching price action, you're doing it wrong. Because if it only appears inside your chart, you're not doing it right. Like I look at the raw numbers when I'm done. Like when I'm away from the charts, I look at the raw numbers and I think to myself how they might use it in the next session, which is the lunch macro. And then I look at how the numbers are used for the afternoon. And I formulate a possible scenario because I know this is the high of the day now and they formed it with relative equal highs. We've broken this. This was initially what? Minor sell side. I didn't label it because I was actively teaching. But this has now been broken. So that minor sell side that would have been annotated as such, this now is primary sell side because it's taken out the initial low of the day. So here's primary sell side, primary buy side because it's taken out a high here and this low is taken out here. So to take out this low is a much more meaningful event. It doesn't mean it can't soup it. It just means that it's a lot more meaningful how we trade around it. And I'll explain this second. Give me a second. I'll have to annotate it. Bottom left. Now, because we've taken this low out with this drop down, we rallied up. Consequent encroachment of this gap over here. When we traded down through it here, you see how it offered it as a premium array and then sold off into this inefficiency right here, there. See that? Now that we're rallying above, I would like to see this now with the color that it is here. I'd like to see it be treated as a reclaimed fair value gap. So where we would have expected initially if we were not fully understanding what it is that goes on in the marketplace, the first time it drops into that, someone might think that, okay, that's one of those ICT buys when that's the draw there. And we knew that when this was a inversion fair value gap earlier. We sold off from here to here into that fair value gap. That is a trade setup that I think that my son would do well with. It's a real easy bread and butter type setup. Now that we rally back above this gap over here, I want to see this act as an inversion fair value gap. It need not trade to it, but if it does, if it trades down into it, we can use that as a stepping stone to see if we can get to the buy side. That's a minor buy side right in here, right at those highs. And because you have this inefficiency over here, you want to drag that over too. And both of these areas in here, I'm going to watch to see if they can find some support at them or inside of them. Or if we quickly run into this down close candle here, this down close candle should not see its halfway point or mean threshold traded to. If it does, it's not good, and that means that most likely we're probably going to go lower and probably trade lower for the duration into the lunch hours. And where we're at right now, I would be more comfortable looking for it to try to trade up into that minor buy side that I have annotated here, because that would be a little stop hunt inside of the run from here down. The only time we've had a stop hunt, we've done it on this little wick. I don't like that. I want to see a bodied swing high, something like this, versus something like that, because we already hit that. We went lower. Excuse me. And then we ride back up. We haven't taken this high out yet, but we're respecting the lower half of this inefficiency. By definition, that's actually indicating that it's weak. So you have to stop and think for yourself, what has the most money been made on most recently? Would you say being long or being short? Because this is what you do when you trade the lunch macro. I'm going to be with you till noon today. So we're going to have just a little bit longer one today. And each day, the rest of the week, will be shorter because I'm just going in and taking one or two setups and then closing the session out. Because that's what I want my son to do. Get in, get his, and go home. So yeah, we went down into half of this gap between this candlestick's high, that candlestick's low, and the bodies just went outside of that inefficiency's low over here. So it's left that lower portion open. So if we can, as soon as we trade above this high here, that cancels all this not remove, this inability to move to the upper half up here of this inefficiency. Now I can imagine when I first started talking about this to Caleb, I was thinking this is going to be real easy for me to explain to him. And as I started to explain it, and the deer in headlights look on his face was like, oh, this isn't going to be as easy as I thought it was for you to pick it up. And I started to second guess myself as a teacher for the very reasons of not feeling comfortable reaching for the words I thought were going to be easy for him to grasp and say, oh yeah, I can see that, Dad. And I guess it's me taking light of how long I've been doing it. I naturally think that it should be everybody. If I'm going to sit down with you one on one, it should be real easy for you to do it. And it's a little disheartening to see how when I start to do it one on one again, it's like it's not as easy as I want it to be for them. And it's because it's my son.